Hey everybody, it's Green Spud Trades here. One of the stonks that I have in my long-term growth portfolio is Sweetgreen, which is a chain of restaurants. It's kind of like Chipotle, but for salads. And one of the locations is here in Indianapolis in the Fashion Mall. I'm going to go check it out, and we'll see what the Sweetgreen experience is like. First of all, I want to point out some history about this food court. The Sweetgreen location opened in September of 2022 and is their first Indiana location. I didn't know about it until just recently when I was researching this company. The restaurants here have a high rate of turnover. Previously, that space was occupied by a local restaurant chain named Public Greens. That entire chain went out of business. The area in the center right now is empty, but it seems to be one of those cursed locations in the mall. Just a few months ago, it was a bar, and before that, it was a bubble tea shop. Pre-pandemic, it was Pinkberry. This food court also used to have a Chipotle and a noodles company. Both of them closed those locations here sometime around 2022. The steak restaurant is also gone. This is the place. Let's check it out. Sweetgreen features an assembly line style menu similar to Chipotle, Qdoba, or Cava, where you can customize a bowl or select from an established recipe. For my meal, I chose the caramelized garlic steak for $15.95. There's a $2 upcharge for including an avocado. Well, half of an avocado. The base ingredients for this meal was wild rice, broccoli, tomatoes, sweet potatoes, a few ounces of steak, and a pesto vinaigrette. I got mine without the vinaigrette. The cost for me was $17.95 before tax and tip. In this area, a similarly sized basic bowl at Qdoba will cost me a little more than $12. At Chipotle, I'll be paying about $13 to $14. So Sweetgreen is a bit more expensive than those competitors. However, its value proposition could be that it's a healthier meal with its ingredients and avoidance of seed oils in the cooking. So here's my Sweetgreen box. I spilled a little bit of coffee on it on the way home. But notice how all the packaging is paper, biodegradable. I like it that they don't have plastics in this because I want to avoid microplastics in my diet. One thing that impresses me about this company as somebody who tries to eat healthy is that they're not using the microplastics, and they recently announced that they're not going to be using seed oils in their food either.
The oxidative stress that occurs with smoking kind of poisons us for about 6 months to a year after quitting. But when we consume the seed oils, right, it's going to poison us for about 3 years.
Now it's time to test out how this meal tastes and see if it's as good as some of the other lunch places I go to, like Qdoba or sometimes Chipotle. I don't know what cut of meat this is, but the beef, it's a little bit dry tasting. Not my favorite kind of meat. I can't tell if the broccoli that they're using is frozen or fresh. Might be previously frozen broccoli. Okay, so I finished my lunch. Overall, I would say that food was not bad. It was good vegetables. The only complaint that I had was that the meat was a little dry. It tasted kind of like roast beef that was somewhat overcooked. Now, although this meal tasted all right, would I do this every day for the $17, $18 that I paid for this meal? It's a little hard to tell because things are a little bit pricier nowadays than they used to be with inflation. So it's hard for me to say what's a normal cost for a meal. Now let's take a look at Sweetgreen's financial performance. Here's a breakdown of their expenses from their Q3 2024 10Q. I've made this chart to help you better visualize how the costs break down. As you can see, the bulk of their cost is in the cost of goods sold, and this includes the ingredients going into the salad, but also the cost of labor and the operation of the store. Cost of goods sold eats about 80% of their revenue. The next biggest expense that they have is the general administrative cost. This cost is about 21% of their revenue, and that, combined with the cost of goods sold, pushes them to an operating loss. Now let's have a look at how this stacks up against their competitors, and we could start by taking a look at Chipotle, which is a very similar business. Chipotle generates about 15 times the revenue of Sweetgreen. As of Q3 2024, they made $2.7 billion in revenue, whereas Sweetgreen only made $173 million. So Chipotle has a much better economy of scale. Chipotle's cost of goods sold is better, taking only 74.5% of the revenue, but their general administrative cost as a percentage of revenue is much smaller, eating only 4.5% of revenue compared to the 21% for Sweetgreen. Nominally, Chipotle spent $126 million on general administrative expense in Q3, while Sweetgreen spent only $36 million. Chipotle may have a bigger overhead, but it takes away a smaller chunk of the business's overall income. I think this is a reason to be optimistic for Sweetgreen, because if they're able to open up a few more stores and scale up a bit, the distribution of their costs might help with profitability. If we look at Cava, another assembly line style restaurant, we'll see something similar with a cost of goods sold of 73% and general administrative cost of 12% of the revenue. Cava is currently bigger than Sweetgreen with a revenue of $233 million for Q3 2024. Sweetgreen is unique because they're investing heavily in the technology that they call Infinite Kitchen. It's an integration of robotics into making the salads. The idea is that having a machine build the bowl will be more cost-effective than human labor. Management's really counting on this initiative to cut costs. Nobody knows whether this is going to be successful, though. It's quite possible that customers will find it off-putting to go to a restaurant that acts more like a vending machine. But if Sweetgreen is successful in pulling this off, they will be a leader in the technology, and it could do a lot for improving those operating margins. Reading through the SEC filings and on their conference call transcripts, I wasn't exactly clear where Infinite Kitchen is being expensed on the income statement. The build-out and the support of these Infinite Kitchen systems might be contributing to their high general expense. Each of those Infinite Kitchen systems costs about $500,000, and in 2025 they plan to open 40 new stores. Half of those will be using the Infinite Kitchen automation. So here are my final thoughts on Sweetgreen. They report earnings on February 26, and I think it's going to be a big earnings mover because of where they are in their growth stage right now and this whole Infinite Kitchen rollout. I've been holding a few shares of this stock, and I'm going to be honest, it's been quite brutal for the last few weeks because the stock slipped from the 30s, now it's going into the 20s, and I'm not really sure where the bottom is going to be. But I think if we get a good washout, I'm probably going to add to my position. I've been trading this stock where if it has a good surge, I take some profits, but if it has a strong dip, I'll buy some. And so far that's been working. Right now my position's underwater, but it might be a buying opportunity if the risks involved in this company work out and they could achieve profitability. Well, I hope you liked my overview of this company. If you did, subscribe to my channel for more content like this. And if you want more, you could also join my Discord group. The link is in the description below, where you could talk about stocks with me. So if you want more content like this, subscribe to my channel, and I'll see you next time.